Hello guys, welcome back to my channel. This is Soji and you are welcome to Soji Forex. In this video, I'll be sharing with you a very important aspect and method of trading, which is the order block trading strategy. If you are new to this channel, on this channel we share ideas and counsel on how to trade the financial market. That is how you can make profit trading the bulls and bear market. We share with you a strategy that has been tested and proven over time that you can take advantage of in making profit from the financial market. So all you need to do is like, share and subscribe to this channel. So today we are looking basically at what an order block is all about. What is an order block? I've been hearing an order block. Today we want to look at what exactly an order block is all about. We must know that every price, whatever you see on the chart, has a particular pattern. Okay? And so when we are referring to an order block, we are simply referring to a block that contains an order. Another block is a zone or a block that contains an order, and then simply means we are talking about a candlestick that contains an order. And how do we know that a candlestick contains an order? It is the ability of the candlestick to move the price, that is the market, from that particular zone to a new level, either to a higher high or to a lower low. And as such, we categorize such a candle as an order block. So categorically, or basically, we can say that we have two major types of order block, or three types of order block. We have the bullish order block, we have the bearish order block, we also have the king and the queen order block. But today we are looking at what is a bullish and a bearish order block. So what is a bullish order block? A bullish order block are easily identified in an uptrend. When the market is in a bullish structure, then we have a bullish order block. We have a bullish order block. And a series of a bullish order block is what gives us an order flow. That will be discussed in the subsequent video. But today we are looking at order block trading strategy. So what is a bullish order block? A bullish order block is the last bearish candle. A bullish order block is the last bearish candle before the creation of a new higher high. The last bearish candle before the creation of a new higher high is what we refer to as a bullish order block. And what does that mean? A typical example is what we are having here. This is an uptrend, and here we have, this is a bullish order block. Okay, this particular candle here, this particular bearish candle is another block. This particular candle we are having here, it is our order block. That bearish candle that I've just highlighted, this, yeah, okay, let me get another. Good. So this bearish candle you are seeing, this last bearish candle, is what we refer to as a bullish order block. And why do we say so? It simply means that in this candle are bullish orders that moves this market to this upside. And that is why we refer to it as a bullish order block. And how do we know? And that's why we said, you see that when the market returns back into the zone of this order block, when the market returns back into the zone of this order block, which I have highlighted, it was able to retain the price. The candle was able to hold the price and take the price up to a level of creating a new higher high. And for that reason, it is a valid order block, a valid bullish order block. Why? Because there are a series of bullish orders. Okay, let's use this arrow to represent orders. There are a series of orders that are waiting in this candle. And as those orders come into this particular candle, as those orders came into this candle, price came back to that zone and then it went up. So it contains a buy order. Then after this formation, you can see here is still another one. This is another bullish order block. Price left here. The price left this order block, this last bearish candle, price left to create a new higher high. So the last bearish structural candle that is formed at that structural point, that is why we refer to it as a structural candle, that is formed at that structural point is what we refer to as a bullish order block. The last bearish candle formed at a structural point before the creation of a new higher high is what we refer to as order block. And then you can see the validation of it. The price went, create a new higher high, came back, because there are a series of orders, buy order, that are contained in these candles. When price return back into that zone, automatically the price bought. The market moved from this zone, it bought to create a new higher high from that zone. You see, a new higher high was created. So these things keep happening often, over and over in the market. Here is another one. You can see this. This is also an order block. Let me highlight it. This is another bearish order block. The last bearish candle before the formation of a higher high is what we refer to as a bullish order block. It is a bearish candle, but it contains the bull order, which is a buy order, are contained in it, that whenever price come to that order block, it should buy. And then look at when price came, tap into the zone of the order block, you see that it bought to the upside. So that is all about bullish order block. Okay, so let's see if we can get a bearish structure where we can simply identify our bearish order block. Okay, where we can identify our bearish order block. You can see all over this place we have bearish order block. Now bearish order block. So many of them here. And it is the same thing that we have explained earlier. But the opposite is the case. A bearish order block is the last bullish candle before the formation of a new lower low. The last here is the order block we are talking about. This particular candle, this green candle, that green highlighted candle is our bullish order block. Here is it. This particular bullish candle is our bearish order block. We call it a bearish order block because it contains sell order. So many sales order are inside that green box. So many sell order are inside that green box. So the last bullish candle at a structural point, which is the lower high, before the formation, if you look at this critically, there is a break of structure here, and then there are so many others here. This low was taken here. If you look at this also critically, you realize that as well this low also, this low was taken, this low too, this low was taken, and then this low was taken by this move. So here too, this is our order block. We have another order block here. We have an order block here in this zone, and then you see that price came into it, tap into that order block, and then move massively to the downside. So this is our bearish order block, and then price came back, and then inside this zone, whenever you see price return back to your order block, it is a good opportunity for you to take a sell in a bearish order block. And if you see the price return to a bullish order block, you should know that it's a good opportunity for you to take a buy. And this can be done more accurately when you combine it with your Fibonacci, because the Fibonacci will help you to identify your premium and discount zone. So having identified your structure, because it's your structure that will help you to identify the bullish and the bearish order block, because these bullish and bearish order blocks are formed at structural points. So a bullish order block is the last bearish candle formed at a structural point, that is a higher low, okay, before a formation of a new higher high, while the bearish order block is the last bullish candle formed at a structural point, which is the lower high, before the formation of a new lower low. So you can use your Fibonacci to target this and take this entry. In case you don't know what the Fibonacci is all about, we have made a video on the Fibonacci strategy, so you can watch our previous video on what Fibonacci strategy is all about, and you can take advantage of it. Here is a bearish order block. Okay, you can see this is a bearish order block, and all you need to do, you put your fib level, then you fib it from wick to this low, from the high to the low, and then you see market pull back into this order block. Market pull back into this order block to 88.6 level of the Fibonacci. It gave us an inverted hammer, a rejection, and with this rejection, we make our entry, our stop loss is here, and our take profit is here. And then you see that it plays out, okay? If you want to get this more, please, I recommend that you watch our previous video, all right? And you will understand what I am talking about. This is another bearish order block. You see how market came back swiftly. Market came back swiftly into this order block. We got the rejection, and then it went down. So these things are pretty simple. It keeps happening often and often in the market. All you need to do is watch our previous video, and you will know how we take advantage of this. Okay, this is it. The market pulls back into that order block. You see it, tap into it, give us an evening star formation, your TP here, and then you see that it plays out. Okay, after that we have another formation of another order block right here, and then the market tap into it and it went down beautifully. Here is another order block. Okay, you see that? So these things are there. These are bearish order blocks. Okay, so it keeps happening, it keeps happening, it keeps happening, and then you fib it. Okay, your Fibonacci will help you to enter at a premium and discount zone. Like I said earlier, watch our previous video. So this is all about a bearish and a bullish order block. In the subsequent video, we'll talk about the kings and the queen order block, and then how you can take advantage of it. I believe you are getting value from this video. Please do not forget to like, share, and subscribe to this channel. Thank you.